Good day all. Ira Epstein of Linn and Associates with your metals market wrap up, and here we are now on Wednesday, and we're going into an important day tomorrow, Thursday, but today's Wednesday, the 9th of October, 2019. I say tomorrow's important because we have the U.S. trade deal staring us right in the face, and that will be an important piece of information. Now, the Fed came out today in terms of their notes, and in reading the notes, there's some members that are concerned about trade war. There's members that are concerned that maybe the U.S. is sending the wrong message in the rate cut, rate cut, rate cut. We say that that's not going to be anything more than insurance cuts, yet we're continue to make them. So I'll let you see that if you're a subscriber to my research. I'll include tonight the text of all that, my take on it, what the highlights were. As you can see, gold and silver both had a nice day to the upside, but as readers of my research know, I had pinpointed for you, I thought the 1515 area was going to be a problem in gold, and it did turn out to be that. So we're going to find out where that goes for us. The stock indices were up. The president held another one of his news conferences that he holds almost daily now, and he was talking about the trade and summing it up, I think, in a real good way. China needs to deal more than he thinks the U.S. does. We're not 50-50 on this. We're not equal. He believes China took advantage of the U.S. for decades on this, and the wars are over, everything's over, and it's got to be more for what he wants. I don't know what that means. I know that the only thing I've seen that China's offering is more soybean purchases. That's concrete. Everything else they want off the table. And they said today that they did not think it helped that yesterday he put that ban or the blacklist on 28 total agencies and people. So we'll see where you go with that. So let's go to the chart and see what we've done. We're in a consolidation phase so far. You've gone from 1526.60 as the high close recently. This is a weekly chart of closes. You haven't been up here for a very long time, and you haven't broken much from that. You're all of $20 off of it, and that high was made, as we know, we were talking about this just yesterday, August 23rd. So here we are, almost, 3 months later for all purposes, still hanging right in there. My instinct as a chartist when I see that is if the market clears this 1526.60, the word is if, what is above that, because everybody that is short on a closing basis under that is wrong in this market at this point in time. When we go to a daily bar chart, I'm going to go back to what I said. You're stuck on the daily chart between this 1540 level down to the 1460 zone, and you've just been hanging in here. Now, trying to get a second guess as to what that means, that's the hardest part. Let me explain that. You've got a pattern, if you look at the swing line, of lower highs and lower lows. I don't want to include today. I want you to see how that looked. When you put today's action in, I can argue that you've got lower highs, but you also have higher lows. Market's in a stall. We're going to figure out what's going on now. Where's the 18-day average of closes? I want you to look at the red line. Tell me where the market's at. You're getting no edge is what I'm saying going into tomorrow's trade data. If you get under 1492.10, the action is bearish. If you get over 1525, the action is bullish. You negate the downtrend by getting over that number, and you start a new downtrend if you get under 1492.10, another leg of it. Whoa. Where's the Bollinger Band? Well, if you clear 1525, it's 1537.90, and if you clear 1492, it's about $10 lower. Do you disagree that you've been going sideways, so the market is coiling right in here, trying to figure out what to do next? And it makes so much sense going into key numbers. Now, what we did not get today is a super reaction to the FOMC notes from last month. Those notes are 3 weeks old. A lot has changed, a lot has gone on, but trade issues are right in front of the Fed, and they keep saying that. When we go to momentum, what do I tell you? I tell you that the close was over the 18-day average, so the bias is up. The swing line is down, so the two fight each other, and momentum is trying at ever best to continue pointing up, but it's not running to the upside. It could, and as I said, I've given you what the parameters are. So that's the futures. What about GLD? Little different picture. On this picture, it's bullish. You have higher lows, you've had higher highs. So the key on this market is this. You've got a settlement over the 18-day average. The swing line is up, the bias is up, and momentum is pointing up. What you don't want to take out is 140.24. If that number is taken out, you could end up with lower highs, lower lows, back into the downtrend, but you've got support under that 124, wherever that lower Bollinger Band comes in at 139.07. If that were to give ground, then you've got the possibility all the way back here of 135.5, let's call it. I think that going in, you've got a bullish bent in the GLD. When I come to GDX, I've got the same chart. So 2 out of these 3 charts are pretty good. For the bulls, you've still got higher lows, higher highs, supports being found. 5 days now the market's been fighting at that 18-day average of closes. You know, if you're a regular watcher, I call that the line in the sand. From the 18-day averages where trends decide what they're going to do, when they're going to set up a trend. Right now, as much as this market's in an uptrend, it's also in a churn. It's just spinning around here. Let's assume the market likes what it sees tomorrow and gets over 28.38, whatever that means, likes what it sees. Well, if it clears that number, the next objective's 29.35. You break the uptrend if you get under 27.14, but you don't start a downtrend under the current pattern. So that's the interesting part. I don't see how a downtrend begins out of this. I see how an uptrend can extend, and I see a combination of support at the 100-day average and the lower Bollinger Band. In the gold-silver ratio, I cannot definitively say the correction from when you got down under 82 on the differential up to near 86.5 has run its course. You still have the market, while it's now trying to thrust back down, the support's the 18-week average of closes. So the bias is up, but you've certainly lost that oomph. I hate that word, but it's the way it is, to the upside. In the silver market, you have a pattern of a lower low and a higher high, not a trend. Where's the battleground? You went yesterday to the 18-day average, you stalled. Today you went to the 18-day average, you closed under it at 1781. These markets are trying from this 18-day average to figure what's next. In the copper market, we had run up yesterday for the first challenge of the 18-day average since back here, literally before October began, so a couple of weeks ago, 3 weeks ago almost, I guess, and we failed on this run to it. But what you've got is higher lows, higher highs. So what the market's missing is the close over the 18-day average to get the bias up. It doesn't have it. These two negate each other. You've corrected past tense and oversold condition. Are you pointing up? Well, I would say that if the market clears this 260.15, you could catch a lot of traders here and make a run for this combination of wherever the Bollinger Band and the 100-day average are. If the trade deal doesn't come out good and the market doesn't like what it sees, and I'm not saying it'll be announced tomorrow. Remember, it's a 2-day meeting. We'll find out what goes on, and I want to go on record. I didn't think the senior Chinese people would come in after yesterday's action. I don't know who's on that airplane coming here. We'll know tonight, obviously, if but apparently the vice premier is coming, so he's important as can be. He's number 2 man. We'll see what goes on. I'm looking on a decline if the market doesn't like what it hears, the lower Bollinger Band. Platinum market. We got up today to 901.70. Did not clear the previous highs. But the pattern has been what I told you. You've got higher lows, lower highs. You're in one of these funny consolidation patterns. If we look at these slow stochastics, I'll come back here. Both numbers are under, as you can see, 20. Both were under 20 the day before, and the day before, and the day before, and the day before. It's called an embedded reading. And it means that the market's getting selling on this rally. Now, if the red line closes over 20, you get a spin out of that, and it often leads to price and the nearest key moving average coming together. In this case, to the upside, it would be the 18 at 922.10. Again, going into this trade deal, it's very difficult because when you look at chart patterns, they're based on what the market thinks it knows to a degree with a certain look forward. I think you'd agree with that statement. But you can get shook by a key report that just throws everything out of kilter on you. I mean, think of what would happen if the president said, hey, we have a complete trade deal. Nobody's ready for that. They're at best hoping for a step of a trade deal. So I'm just explaining things that can go on. In the palladium market, you're not trending. You broke down to this 18-day average of closes, you held it. You're just going sideways in these Bollinger Bands and ripping this market up. And in the dollar index, the trend remains to the upside, higher lows, but there's a warning sign here. You're in a pause because you suddenly have lower highs. If the market can take out 98, 95 and a half, you could end up with higher lows again, in other words, keeping that formation. But if you clear that, the next resistance is 99.20, back into this high area here. If the market doesn't clear that number, but were to take out 98.30, you could end up on a perfect world looking forward, lower highs, lower lows, and then if you closed under 98.45, you'd be in a downtrend and you'd look to see if momentum is meeting it. So that's where you're at. I'm Ira Epstein. I will talk to you all tomorrow.